Today we're going to be talking about the basics of TFSA. If you watched our last video, we talked about the basics of the RRSP account, and so today we're going to be explaining the TFSA and how that's different. For those who aren't aware, the TFSA is an acronym for the Tax-Free Savings Account. It's a registered account available for individuals in Canada to put their investments in, similar to an RRSP. Okay, so the TFSA was started in 2009, and it's available to any Canadian resident that's 18 and over and has a valid social insurance number. TFSA is not a particular type of investment, right? The type of investment could be stocks, GICs, bonds. The TFSA is what, again, you can put those investments in. You can register the account as a TFSA and have the tax benefits that come from that. What are the tax benefits and how does it work? Well, as the name alludes, a tax-free savings account is tax-free. So it has zero impact on your taxes. When you put money in a TFSA, it does not impact your taxes at all. There's no deduction, there's no credit, there's nothing. Also, any investment income earned on the investments within a TFSA are, again, not taxable. Whereas a normal investment that's non-registered, if you earn $1,000 of interest income, for example, you'd have to report that on your return and pay tax on it at whatever rate you are at. Versus a TFSA, there's no tax slip, you don't need to report on your return, and so you can save yourself the taxes on a yearly basis and have your income, your money grow for you a lot quicker and faster and help towards your retirement, okay? And then unlike an RSP, you don't need to pay tax when you put it in, you don't get a savings, you don't pay tax when you take the money out. So how much money can you put in your TFSA? Well, there is a yearly contribution limit available to everybody, and that limit fluctuates from year to year. It's gone as low as $5,000 to $10,000. Currently for 2023, it's at $6,500 for this year. Okay, and so if you haven't made your contribution this year and you are looking to put money in, $6,500, and that you need to check on a yearly basis. It's gonna be different for 2024, 2025, and so on. Okay, if you were 18 and over in 2009 when they came out and you've never contributed, those RSP room that you missed out on are not wasted. They're still there. They do carry forward, so you are able to make contributions for limits from prior years. Somebody who's never contributed in the past would have, I believe, $88,000 of room as of 2023 to contribute in there. And so if you wanted to, you could put up to that amount into your RSP in one shot this year and then do the yearly contributions, or up to the yearly contributions in 2024 and on a go-forward basis. You do need to be careful not to over contribute, because if you over contribute to your TFSA, there is a 1% penalty per month on the excess contributions. And so you don't want to go down that road. And so just make sure that when you are making contributions that you check what your limit is so you know how much you're available to make. So how do you check that? Well, you can go to my CRA account online. You can talk to your account. They should be able to look that up for you on your CRA account online through their rep a client, or you can call the tax information phone number and get that information directly from them. So let's go over a small example of putting money in a non-registered account versus putting money in a TFSA and what impact that would actually have on your cash, on your money, okay? So for somebody who puts in, let's say $500 a month, that's $6,000 for the year. We're in the RSP contribution limits currently. If you're getting investments, let's say at 7%, and you are taxed at 35%, somebody doing that for 20 years, if you put the money in a TFSA, you'd have roughly $65,000 more at the end of that 20 years than if you had put it in a non-registered account. And why that is because of the tax savings that you have on the income earned. That gives you roughly 33.5% more money. So a third extra than you would have if you didn't invest in a TFSA. Okay, so you can see kind of the benefits there. So what is the best scenario for who should be putting to TFSAs? Well, essentially when you're starting off and you are in the lower brackets, that's when TFSAs make the most sense because there's no tax impact. You're not getting a big savings like you would with an RSP if you're at a higher bracket, and you can save those higher earning income years for RSPs. But I won't go into too much detail because we'll do another video that dives deep into the scenarios where we want to do TFSAs versus RSP. So just know that TFSAs are a really good option for anybody wanting to look at starting to put money in, especially for younger individuals that are just starting off with their investments and at a potentially at a lower tax bracket. Thank you for watching, and we'll see you next time.